Hello everyone, welcome back. I got some really good ones for you today on this Tuesday, April 25th, 2023. A lot's been going on inside the markets, so let's dive right into it, shall we? First order of business, I was wrong about my market calls last week. Let's just air it out. Throw garbage at me because I was wrong. In my video a week ago, I predicted that Bitcoin and gold sound money plays would kind of pull back. The tech-heavy NASDAQ would continue grinding higher. The financials would continue grinding higher. Bond yields would remain stable. And that kind of backdrop would drag altcoins like Ethereum higher, kind of allow them to play catch up with that overcrowded Bitcoin trade. And especially if the NASDAQ and financials could remain stable. I figured, stable or higher, I figured that could drag altcoins higher. Totally wrong. Bitcoin and gold pulled back. So I guess I got that right. Not totally wrong. I'd said Bitcoin and gold were overcrowded, would probably pull back. If you were going to buy Bitcoin at 30K, wait for a dip. I said all those things. If you were going to buy gold, I said wait for a dip. You're kind of getting that dip. Something to think about. So right there, but totally wrong about the direction of altcoins. I predicted that altcoins would continue moving higher, and they're getting beaten up pretty good. I did get a uni fill this morning, Uniswap. I got a fill in the 5s. Not financial advice, not a buy or sell recommendation. I can't tell you what to buy or sell, nor am I going to, and I'm probably wrong. So there you go. Throw garbage at me when I'm wrong. But I got a uni fill this morning in the 520s, Uniswap altcoin, something to look at. I believe in the Uniswap team, all right? They're based in New York City, kind of have connections to BlackRock and Goldman Sachs. Built a lot of the autonomous infrastructure that kind of powers the altcoin world and the blockchain world. So I like Uniswap, beaten down pretty good. People are worried about Uniswap because they don't see any like new products on the horizon, but they've secured another round of funding a few months ago. Near prices where they're at right now. So I would say, in the low 5s, Uniswap could be, a value play. But again, anytime I come out here and say to buy altcoins, they dump, okay? So, that's showbiz, baby. Welcome to the game. You can totally avoid altcoins too. So, and certainly do not play with capital that you cannot afford to lose in the altcoin space. Trading altcoins is a lot like trading options. The natural evolution is that you put on these awesome gains, and then within 2 years, like clockwork, like being an NFL quarterback, within 2 years, your lifespan is, pretty much played out, and the life cycle is played out, and the odds of you continuing to do really well past 2 years, if you're an options trader or an altcoin trader, start to fall precipitously. An NFL running back has a 2.5-year shelf life. A restaurant generally has a 2.5-year shelf life. A options trader, an individual lowly retail trader like myself, who I don't trade options, but is trading options or trading altcoins, 2.5-year shelf life. You get to be rich for the first 3 months because beginner's luck, right? Then you have all your capital in, then you get rug pulled. You survive that, 55% drawdown in your portfolio. You eventually run into systemic fragilities and risks. Just come out of nowhere, some sort of black swan, and just totally destroys your portfolio. I've blown my account up. It was 2012, so over 10 years ago. Don't blow your account up, guys, but I will say, if you're going to be an individual retail trader, you're probably going to have to learn the hard way. Because, like I said, the natural evolution is to get in, be taking too much risk, making too much money, be like, oh, this is awesome, I'm a genius, and then just get destroyed. Most hedge funds don't last more than 2.5 years. Because it's like the life cycle of an NFL running back. And if this hedge fund is making more than, say, 15% a year, they're not going to be able to do it for more than 2 years. So if you hear about a hedge fund that makes 40% 1 year, they're not going to survive. Check on them in 5 years, okay? They're going to be gone. And they probably will have gone under like 3 years prior. So, be careful with things like altcoins. Be careful with things like Ethereum and Uniswap. And Bitcoin, I'd say to be careful with too, but I'm a believer, guys. It's sound money, like physical gold. So I think Bitcoin is quite a bit more secure and successful for the long term than, some of these weird obscure altcoins. Ethereum, I do believe, is a network that will still exist in 20 years. It's like a $500 billion network, thousands of validators, thousands of applications, and like ETH projects coming out every day. So I do think Ethereum will stick around for 20 years. I do think Bitcoin will, but some of these other altcoin projects, ugh, just be careful. It's kind of like trading options. So, I was wrong about the altcoin trade potentially a week ago, but hey, check out Platinum. Platinum was about 1,015 when I did my Platinum video, broke 1,100 the other day. So, there you go. But when I'm saying, oh, physical Platinum, it's not really like a trade, okay, or an investment. It carries zero counterparty risk. It's the money. It's not really an investment. Investments to me require return on investment, dividends, you're cash flowing something. If you go buy a 1 ounce platinum coin, you're not cash flowing it. It's not going to pay you a dividend. It's not going to pay you an interest rate. It's not going to pay you a yield. It's just going to sit there. But am I a hater? Absolutely not, because it's going to sit there. And generally speaking, those precious metals, the physical ones, are good for, good for holding, good hedges, good way to buy the money, stack the money over the long term. They're anti-debt units, everything, JP Morgan once said, gold and silver are money, everything else is credit. So just something to think about. I would revise that a little bit. I'd say gold and silver in Bitcoin are money and everything else is credit. But, hey, we could have that debate. And for sound money, you want it to be portable, fungible, divisible, tangible, useful, scarce, and indestructible. Bitcoin is, it's not indestructible. You could burn it. You could send it like to a wrong address. You can really screw up your Bitcoin. Gold is indestructible. If you put gold into jewelry, you can melt it right back out. If you drop a gold coin into the riverbed and come back 1,500 years later, it's still shining at you. It is not corroded a bit. So gold is, quite indestructible. And, but it's not as divisible as Bitcoin, right? So gold would be kind of hard to like sit there and shave off, shavings of a coin, or it's not quite that liquid. So I would say Bitcoin kind of beats gold in certain areas, but kind of falls short in certain areas. But I'd say where Bitcoin falls short of being sound money in certain areas, it makes up for in other areas. If you had $250,000 worth of gold coins and you wanted to leave the country, move somewhere else, you're gonna have to claim that in customs. And it's gonna be hard to move. It's gonna be kind of clunky, kind of heavy. Try moving $1 million worth of gold to another country. And then once you get there, you got to pay someone to store it, or it's kind of tricky. I like physical gold, but it's kind of tricky. Bitcoin, you could send $1 million to India for $6. You know what I mean? So Bitcoin is like lightning fast. You can send it across borders. It kind of transcends a lot of power structures. It transcends, governments. It kind of transcends gold in some ways. Put it this way. I like gold because it's very stable, and it's very stable because population and GDP growth is about a 2% per year endeavor, and the gold supply inflates at about 2% per year, so it remains very stable. As human population grows, gold kind of, grows in line with that, making it very stable. But it's still a inflationary asset, in the sense that if I gave you all the gold mined above ground right now, which would fill 3 Olympic-sized swimming pools, not a lot. If I gave you all the gold, in about like 50 years, you'd only have half of it, because tomorrow more gold is going to be mined. Bitcoin, if I gave you like all the Bitcoin, you just have all the Bitcoin. The supply is capped. Now, there's new Bitcoins mined as these supercomputers solve these really complex math problems, these algorithms, and try to mine new Bitcoin, but less and less Bitcoin gets mined as time goes on. So we're running into a situation now where like mining 1 million Bitcoin would take a really long time, and mining 1 million Bitcoin a decade ago was like something you did on your laptop. So Bitcoin is kind of watertight. It's thermodynamically sound monetary energy. Gold is monetary energy because it took you X amount of labor, X amount of jumping jacks to pull that 1 ounce of gold out of the ground, and it remains difficult to pull out of the ground. There's no real automating that process. So gold is stored labor and stored monetary energy, and Bitcoin is stored labor and stored monetary energy. The price to mine 1 Bitcoin in electricity now, today, look that up. It might be $11,000, somewhere in there. $10,000 worth of electricity to mine that, 1 Bitcoin. So the cost to mine a Bitcoin is rising with the price. So Bitcoin is kind of stored thermodynamically sound, non-leaky monetary energy. And gold is quite good at that. Platinum's quite good at that. Silver's quite good at that. The dollar, problematic. They print more of those things every day. Fed balance sheet is coming down though. If you want, go on the Fed balance sheet right now. Just Google Fed balance sheet. Go on the website. It's like stlouisfed.org. Click on recent balance sheet trends, and you'll see how they were performing quantitative tightening all through 2023 until we hit the Silicon Valley Bank fallout like a few weeks ago. And then you'll see the Fed reinflated their balance sheet, wiping out all years worth of QT. But now you can see that Fed balance sheet kind of coming back down. So, they do net, we're destroying the dollar. We're destroying the dollar in absolute terms, but the Fed balance sheet is coming down, and that is, deflationary. If the Fed balance sheet were to be rolled off to zero, wow, that would really freak out risk assets like the stock market, gold, Bitcoin, oil. And on the flip side of that, if that Fed balance sheet, which is like 8 trillion right now, were to double again to 16 trillion, which ultimately I believe the Fed balance sheet will do. It's just a matter of how long that takes. Well, that's going to, double the price of those risk assets, all things being equal-ish. So the Fed balance sheet going up is good for risk assets like the stock market, real estate, because it's the Fed coming in and taking toxic assets off these commercial bank balance sheets and giving those commercial banks cash, It's the Fed buying bonds, driving those yields down, strengthening those bond portfolios for their banks, allowing them access to more cash. So, as the Fed balance sheet grows, I expect risk asset prices to grow with it. And if the Fed balance sheet were to collapse, meaningfully, which I think the ironic part is that's what we would need, because it would imply that the Fed's not holding toxic assets. It would imply that like the free market is setting the price. It would imply that there's like no yield curve control and like everything's real, but it's not going to happen. So, watch that Fed balance sheet grow. And if it's shrinking this year, okay, well, start the timer for when it grows to all-time new highs again. That's kind of how I frame the debt-based monetary system. Whoa, I've totally gone off script. I had some things that I was going to talk about with you guys, and I've just been kind of all over the place. But hey, I don't really got a piece of paper. Streams of consciousness, I guess. So, volatility. We see volatility rising in the markets right now. That's the VIX. Add the VIX to your watch list, okay? It's the Chicago BOE, something like that. It's the VIX. It's the fear gauge. All the VIX is showing you is the ratio of calls to puts. So when options traders are getting really bearish on the markets, they start buying a lot of puts. And when options traders are really bullish on the markets, they start buying a lot of calls. When that ratio becomes more puts than calls, the VIX starts to rise. The fear gauge starts to rise because the options market is saying, we're betting on falling prices here. However, it doesn't make a very good leading indicator. So if you're like, oh, so the VIX is rising, that means, it's going to keep rising and stocks are going to start to crater. Be very careful with that. And don't, in my opinion, do what you want, but I wouldn't trade the VIX. There are vehicles for trading the VIX. Don't trade it. Would be my recommendation. Do what you want. And then if you were going to trade it, just short the hell out of all those stupid vehicles for the VIX that are like always in backwardation and contango, and like the chart's basically always bleeding out like 5% a month. That's why if you look up any of these like leveraged ETFs, like any leveraged ETF, gold, natural gas, it doesn't matter. You look at the long-term stock chart, it's just going to a closer theoretical zero. That's backwardation and contango, and the stock just essentially needing to be diluted like all the time and split to hell like all the time. Watch out for stupid derivatives. I like kicking rocks and picking stocks, but just be careful of derivatives like ETFs, indexes, vehicles for the VIX, long or short, 2 times bull, 3 times vehicles. In my opinion, to hell with all that. Be careful with that. But anyway, make sure the VIX is on your watch list. The VIX is rising a lot. So, the market isn't complacent right now. It's kind of freaked out. We have the 10-year yield coming down, but in an unstable manner. So sometimes when the 10-year yield is stable and then it drops suddenly, what you're looking at is people buying bonds. So if the 10-year yield drops suddenly, that's the bond market actually getting larger. And if the bond market starts getting larger and the dollar starts catching a bid, that can be money leaving the stock market in kind of a classic deflationary fear trade and going into bonds in the dollar. So you can have rates fall really quickly and it's kind of a fear trade, but you can also have rates rise really quickly and it's also kind of a fear trade. And what's going on when those bond yields rise too quickly? We're talking about like 20 basis points in a day, 25 basis points in a day, either direction. When it's rising too quickly, that can be the bond bubble was really big, and then the bond bubble, a bunch of money left the bond bubble, left the debt market and the credit market, yields started to skyrocket, and that kind of scares the stock market. Like, oh, what's going on with the credit market? Because ultimately the stock market is a derivative of the debt market. If you're one of those people that, you like trading Bitcoin, you like trading energy, you like trading tech, but you don't know anything about the debt market, well, you're in hot water, because those are all going to take ultimately their cues in direction from what's going on in the bond market. So understanding the debt market and the bond market is crucial. It's such a big market. For market cap, it's, exponentially larger than the stock market even. So the global bond market is exponentially larger than the global stock market, maybe by a factor of like 5 or 6 or 10, depending on how much leverage and derivatives you have like crammed into the financial system. But watch debt markets, aka the bond market, the credit markets, because those are ultimately what's going to decide, what's going to happen with risk assets. So, watch the VIX, but I wouldn't recommend trading it. Watch the bond market, but you don't have to trade it. Keep an eye on those things. Recession, right? The recession. Oh, the recession fears. So let's talk about the recession, the coming recession. Well, first of all, if you're reading articles right now that are like the Fed and the commercial banks have all agreed that there's going to be a mild recession later this year, then it's already baked in. So maybe stop freaking out. Or the stock market is about to react, but I doubt it. The stock market is usually kind of a leading indicator, and by the time you're reading the headlines, stock market's already baked that in. Also, you're kind of saying, so we're not in a recession right now. Like, so we're not in one right now, but we'll be in one later. Okay. So let me get this straight. In 2020, in April, we went into a recession, but it was only, 3 weeks long. But you can check the Fed website. We were in the 3-week recession of 2020. But then by 2021, we were out of it, right? Because everything was so awesome. And there was no lockdowns and virus and decimated global economy and falling real wages, right? So we were in a miniature recession that lasted a few weeks in 2020. And then we came out of it, right? I'm going to believe that. And then in 2020, we had 2 negative quarters of GDP, but we didn't call it a recession. We changed the definition of a recession last year, so that wasn't one either. So we did have one in 2020, but then the stock market went up 40%, like in a year. So now we're not in one. And then the stock market kind of comes down and we have negative quarters of GDP, but we're not going to call that a recession. But now we're about to have one, even though we wouldn't call what we've been in a bull market. Guys, they're messing with your head. Like, just my opinion, but we're having a recession, okay? You're in it. It's a recession of affordability. That's why nothing makes sense. This is not the Great Depression. We could not print unlimited money during the Great Depression. So you had a deflationary death spiral. You can go watch, old movies like Seabiscuit where they're like, where'd you get $2 whole? That is not the problem we have. The problem we have now is we're printing, $2 trillion a freaking year. You know what I mean? So it's an opposite problem. So can we have a recession, but it's in affordability? So stock prices are high, real estate's high, wages are going up, albeit not fast enough. Real wages are collapsing when you factor in the inflation rate versus how much your wage is going up. You're getting a pay cut. But anyway, they want to inflate the heck out of the markets, do a bunch of yield curve control, do a bunch of quantitative easing, have a recession, not call it that, not call what they're doing QE, and then tell you later this year, don't worry, you're going to get a recession. The recession's always 6 months away, okay? Like, that's never going to change. The recession's always 6 months away, never changes. You're always going to be able to find people, YouTube grifters like myself, on, a recession, a crash. And then what? Their policy prescription is go to dollars, when that is like, a problem in the money has been like the biggest theme for the last 3 years. Oh yes, there's a problem in the money, so now there's not about to be. So the same people that you've learned over the last few years not to trust, the powers that be, well, now you can trust them, because they're going to raise interest rates, roll off the Fed balance sheet, get inflation under control. You can trust them now. Get real, like, in my opinion, guys. So when you're hearing about recession, it's all just psyops. You're always going to be in a recession. And the powers that be want you in a permanent recession and growth, and a permanent bull market and asset prices, and they're never going to tell you that. That's like, one of the big lies. So the recession, whatever. It doesn't freak me out. I still like tech. I still like physical gold. I still like energy. I still like crypto, Bitcoin, Ethereum. You know what I mean? I like to be out onto the end of the risk curve. I don't like the dollar. I don't like cash. I don't like bonds. So there you go. And tomorrow, I'll let you know. Here's what would change my mind. If the 10-year yield skyrocketed like 4% over the next few months, then I would be like, okay, we're in a fundamentally different environment. Yields and rates have broken the back of inflation. Dollars are good. Risk is bad. Inflation's under control. The Fed was serious about rolling off their balance sheet. There is a scenario that could unfold that would totally scare me away from tech, physical gold, energy, and crypto. But I'm not seeing that play out. And, I'll let you know if it does. But last time I checked, yields are falling. If yields are falling, that means the debt bubble is actually getting larger. And just because some money has left the stock market, from what I can see, and gone into the debt bubble, I don't care. Like, it doesn't freak me out. So long and short of it, I'm freaked out for the dollar empire. I'm freaked out for the working class. I'm freaked out for real wages. I'm freaked out about inflation never coming down. I'm freaked out about, the middle class being permanently priced out of owning a home. I'm freaked out about, staring down the barrel of like a lost generation. I'm freaked out about some of the, politics and culture wars and real wars that we have going on, and a lot of the trade deficits. But you see, all those things I'm freaked out about, they're having little to do with stock prices, gold prices. If anything, problems in those areas tend to push those things higher, stocks and gold. So, try to get a handle on what's going on. I'm just trying to help you. I could totally be wrong. Throw garbage at me again when I am wrong. You know what I mean? We're all just doing the best we can with what we got, right? But I do have your back. So do know that when I come out here, I'm not trying to blow smoke and get you on the wrong side of the trade, or prove myself right or wrong. I want you to win, okay? I want to win. I want to see you win. Let's win together. That's pretty much what this channel is for winners. It's not for crash callers. It's not for, hyperinflation callers. It's for winners, and there's always going to be an ambient level of neuroticism in the market. I mean, obviously fear and greed are moving those markets. You know what I mean? That's pretty much all that moves it. And with that being said, fear is much stronger emotion than greed. That's why securities tend to trade up in an escalator and down in an elevator, because greed, it is a powerful emotion, but it's not that powerful. So you see this climbing of a wall of worry And then you have these really quick deflations, because fear is an extremely powerful emotion, which is why we stay cool, calm, and collected on this channel. All right, never rattle. When people aren't acting right and they're losing their minds, that's the best time to strike, generally speaking, in my opinion. But book says buy when everyone's freaking out, kind of thing. Like with Warren Buffett, you buy when the blood is in the streets, as the saying goes. So we're, slogging through this recession of affordability. In my opinion, we went into recession in 2020 and we still haven't come out of it, And I'm referring to a recession in growth and real GDP and standard of living, not really a recession in assets. A bull market in assets is kind of the modus operandi, the MO of the powers that be, right? So don't be, too freaked out. Try not to get too neurotic. FedNow program is coming out. Okay, I wanted to talk to you guys about FedNow. It's not the CBDC, but it is kind of like the rails potentially for a future central bank digital currency. So all that's in the work, all right? You got FedNow going on right now. Individual, people and companies are not going to be messing with the FedNow program. This is all being done internally. It's probably like the Treasury, the Fed, and we'll call it like the Department of Transportation or something. So these different, groups within the beast system, the government system, they're going to kind of start messing around with FedNow program. It's a payment program, okay? It's to have faster settlements, more transparent accounting. It's kind of get away from the old dollar system, the old just, at printing actual debt notes, having actual cash, waiting for settlement times that can take 1 to 3 days. We're trying to kind of speed that up, make things a little bit more efficient. It's also a control play, okay? So don't think I don't see that. CBDCs and FedNow program ultimately is to get a better handle on the population going forward. It totally is a little bit about control. But you have the FedNow program being launched. It's already being tested right now. The testing started in the first week of April. There'll be, more of a rollout for FedNow in July, and then we're going to slowly start to transition more towards central bank digital currencies, which will allow the powers that be to use universal basic income more efficiently, airdrop Fed dollars directly into people's wallets. Maybe have some of those Fed dollars expire, if you don't spend them past a certain time, and the Fed's going to be able to see everything you're buying and selling. So some bad things, but also some good things. But overall, that's the direction we're heading towards, what can you do about it? So FedNow program's going on right now. CBDCs are on their way. FedNow will ramp up more in July, but, pay attention. We need a new monetary system. We're kind of rolling one out. You might think the new monetary system is going to be some other country like the ruble or the Chinese yuan, as those those governments and economies grow. But I think the dollar empire is, although it's under threat, and there is a theme of de-dollarization, and we do see some growing relationships between the BRICS countries, some more alliance between that Brazil, Russia, India, China, South Africa, Saudi Arabia. We do see them starting to kind of build their system, create more alliances between each other and kind of de-dollarize. We do see that. We do see the Saudis kind of looking around I need a new custodian for my energy game. You know what I mean? So the BRICS are coming up in the world quickly, but the dollar empire doesn't have a replacement yet. So if you're seeing all these, de-dollarization videos and, when's the dollar empire just going to implode and we're going to have hyperinflation? Guys, you could be 300 years early to that, ancient Rome started to devalue their currency in if I remember correctly, 150 BC, somewhere in there. And then they were still devaluing in the 3rd century AD. So 200, 300, 400 years later. So so are we getting away from the dollar empire and the world reserve currency status being the US and the dollar? Absolutely. But could that take another 400 years? Absolutely, you know. So New Rome is, you know, kind of faltering a little bit, but there is no replacement, guys. Not yet, anyway. And I know they're getting away from the petrodollar, but the dollar empire does not have a viable replacement yet. These things move slow, and you could be 100 years early, so just, you know, kind of check yourself. We do have Biden, so some political developments. We do have Biden announcing he's going to be running, so that's big. Not really. Who could have seen that one coming, right? And we have Trump kind of coming out right now talking about real wages collapsing under Biden, and, you know, I'm a registered independent, all right, so I don't really like either of these guys. Never did, never voted for either one of them. So just know if I ever talk if I ever talk politics, I'm like a cyberpunk, all right? I trust in Bitcoin, we trust in gold, we trust, right? So not really a statist or a collectivist or a fan of Biden or Trump. But another reason why you won't hear me talk about politics much, it's not because I don't want to lose half my subscribers, all right? The reason I try to stay away from politics is because that's happening much further down the fiat global Ponzi, okay? That's not the stuff that matters. Death, infinity, the rotational totalitarian unelected uniparty, that's all happening, you know, things that actually matter, war, all that's happening way up higher on the global fiat Ponzi, way up higher on the pyramid. The president's security clearance, like there's 12 levels of security above the president. Like he really is just the face, you know. And these other state apparatuses, they're going to keep the president on a need to know basis because they don't want the face of the country to start talking crap on the hands, or the hands might have to punch the face Kennedy style or something crazy like that. So the president is just somebody that was not a very good actor, but still really good at manipulating people, all right? And a lot of things that are happening politically are happening much further downstream of the real issues, the real root of the problem, you know? So politics is like the side stage. It's not the headliner. Now, the powers that be want you to believe it's the headliner. That's a big lie, but it's the side stage. I don't really care about the side stage. I go to the main event. You know what I mean? Same with culture wars. Look, in 2020, in February 2020, when I was reading about Chinese people bricking roads in their cities, like really freaking out in China about this virus that was potentially spreading, and, you know, the poor people of China, like, I'm being locked in my home and starved to death. Like, when I was paying attention to that, Americans were paying attention to the culture wars and pop culture and things that really don't matter. Kobe Bryant's helicopter crash, I mean, rest in peace. I feel horrible and I'm sorry, but people were talking about Kobe's helicopter crash and Jessica Simpson getting sober while we were on the precipice of like a once in 100-year, you know, event. So I stay away from politics and the culture wars because it's not death, infinity, interest rates, the powers that be, Jamie Dimon, the Fed, you know, the Treasury, the Fed, war, the dollar empire. It's not. The president's just like, hey, I'm the face. What's up? And it doesn't. And you'll learn over time too. Traders in the markets kind of have that opinion too. They don't really care who's in office. The beast system will feed, regardless. You know what I mean? So I stay away from politics and culture wars, but it's not because I'm afraid to talk about it. It's because, in my opinion, it doesn't hold a lot of weight bearing on reality. It doesn't. It's designed actually to keep you off balance and confused, and it's noise. So anyway, that's really all I got for you guys today. You know, being wrong, my Uniswap buy in the 520s. I still like physical gold, tech, energy, crypto. Not a whole lot's changed, and we're just going to keep going, all right? I hope you found some of this useful. I hope this helps kind of frame everything for you. I could totally be wrong. Make the best decision, you know, for you. Like, subscribe, comment, share. You guys are awesome. Thanks so much for supporting the channel, for hitting that like button, that subscribe button. Really helps me out a lot. I want you to win, all right? And I want to win. We're just going to keep going. If you agree or don't agree, hey, it's all good. Let me know in the comments if you don't agree. You know, I think that's how we ultimately get better. So really all I got for you today. Hope this video finds you doing well. Till next time.